The presidential election just a few months away, economy topping the agenda. So I thought, let me bring in one of America's top business leaders and hit him on oil, too, while we're at it. Listen, it's great to see you. We got the CME Group President and Executive Chairman, Terry Duffy, with the beard. Good to see you, Terry. Let me hit
Thanks,
oil
Liz.
first, because right now it may be down, but again, it's up 60% from its lows back in February, all over the place. You guys make money either way as the world's largest futures exchange, right?
Well, there's no question about it, Liz, and there's going to be continued volatility in oil. I mean, anytime the oil rallies, we're going to get new explorers back into the market because we know the production can read the profit at higher levels. So Saudis aren't the only ones that have oil anymore. We have it here in the United States. It's a question of what's the cost to get it out of the ground at what price. So that's the only question we have right now.
Okay, but it's a bear market. It's in a bear market. Does it stay there?
Yeah. Well, it's going to be, like I said, it's going to be really hard for oil to rally, to the levels that we saw a couple of years back, only because of, we were basically going to be energy independent by 2018, Liz, at $80 a barrel because of what's available here in the United States. Now, the question is, where's it going to go?
Yeah,
we don't know.
Be careful what you wish for, because now we have a ton of supply. All right, so short oil.
We have a lot of supply.
So Terry's saying short oil?
I didn't say that, Liz. I don't say short or buy it. I think there'll be volatility in oil without question, both sides of the market.
Way to take a side. You think Jonathan Toews, the Black Hawk captain, would have been so middle of the road? No, he'd be like hammering.
Yeah, come on now. Johnny would have taken the same stance.
Oh, yeah, okay. All right, let me get to the overall picture of what's going on, because you employ a lot of people at the CME. You are a job creator. So not only do we sit here and talk to you about oil prices, but we got to talk to you about business in America and the tax plans and the overall plans that both candidates have. And just today, Donald Trump said that he would double the stimulus plan that Hillary is proposing. Hillary Clinton proposes about $275 billion in a stimulus plan. Donald Trump came on Stuart Varney and said, you know what, I would nearly double that to about 500, but he was a little slippery on the details of how he would manage to do that. So you, as a business leader, know that it comes from either taxpayer money or what have you. Yep. Are you taking a side in this fight? You have supported Hillary in the past, but you are a Republican.
I did support her in 2008. I thought she was the best candidate, and right now I'm not supporting anybody, Liz. I think both candidates understand the benefit of our industry and what it can do for the world and financial services in general. As far as stimulus packages go, Liz, I think when you look at quantitative easing over the years, we've bought back existing debt. What we should do is put forth a stimulus package that goes into the infrastructure of this country. I think both sides of the aisle would agree with that. Take about $1 trillion, put it on the Fed's balance sheet. Instead of having the Fed buy existing debt, take on new debt, put people to work, and that's how you can grow this anemic 1 to 2% GDP to 2 to 4% and have real growth in the United States of America. At the same time, fix this country.
Yeah, I've seen a couple of potholes on the roads in Chicago that could use. Listen, that is what it was originally for. There was an $830 billion stimulus plan. Some of it was just frittered away. But you talk about the fact that you are based on a lot of trades. Capital gains taxes. They both have different plans on this. Hillary wants to basically raise them depending on the amount of time that people hold it. Donald Trump wants to lower capital gains taxes. But is that really the answer on sort of tweaking trades and things like that? High-frequency trades and taxing them?
Let's think of it this way. Let's think of it this way. The U.S. equity markets are trading on all-time highs. And that's just coming off of a Brexit decision that everybody had the market going to new lows. So now we're on all-time highs. People are chasing yield. The government, we have about $8 trillion in debt that Americans have today. So zero interest rate policy does not work for the United States. So everybody's chased the equity markets. Could you imagine if we have higher capital gains, what could happen to the U.S. equity markets over the next 6 to 9 months if in fact you higher the capital gains rate?
Terry, thank you.